When it comes to safeguarding your cash, understanding where to park your money is fundamental to sound financial management. Whether you're saving for a rainy day, building an emergency fund, or simply looking for a secure spot to store your hard-earned dollars, the landscape of financial institutions offers a spectrum of choices. Each option comes with its own set of benefits and trade-offs. Let's explore, in depth, the main places where you can keep your cash, from the familiar commercial banks to more specialized alternatives, so you can make informed decisions that fit your personal financial goals. First, let's examine commercial banks, which are the most widely recognized and accessible financial institutions. Names like J.P. Morgan Chase, Bank of America, and Wells Fargo are household staples, serving millions across the country. These banks offer a suite of accounts tailored for everyday needs: checking accounts for transactions, savings accounts for storing cash, money market accounts for those seeking slightly higher yields, and certificates of deposit, CDs, for fixed-term savings. One of the primary advantages of commercial banks is the protection they offer through the Federal Deposit Insurance Corporation, or FDIC. This means that up to $250,000 per depositor per bank, your money is insured against bank failures, a reassuring safety net. Additionally, commercial banks provide extensive ATM networks, easy access to branches, and robust online platforms. However, it's important to note that traditional banks often offer lower interest rates on savings accounts compared to other institutions. This means that while your money is very safe and easily accessible, it might not be working as hard for you in terms of earning interest. Next, we have credit unions, such as Navy Federal, Alliant, and a host of local community credit unions. Unlike commercial banks, credit unions are member-owned and operate on a not-for-profit basis. This unique structure often translates into higher savings rates and lower fees for their members. Credit unions typically offer the same types of accounts as banks: checking, savings, and CDs, but with the added benefit of the National Credit Union Administration, or NCUA, insurance, which protects your deposits up to $250,000. One consideration is that credit unions often have membership requirements, such as living in a certain area, working for a specific employer, or being part of a particular group. They may also have fewer branches and ATMs, which could impact convenience, especially if you travel frequently or live far from a physical location. Still, for those who qualify, credit unions represent a compelling alternative to traditional banks, combining safety with potentially better returns. The digital age has ushered in a new category: online banks. Institutions like Ally, Discover Bank, SoFi, and Capital One 360 are leading the charge in online banking. These banks operate without physical branches, relying instead on efficient online and mobile platforms. One of the standout features of online banks is their ability to offer high-yield savings accounts with interest rates significantly above those of brick-and-mortar banks. Lower overhead costs often mean lower fees and better returns for customers. As with traditional banks, online banks are FDIC insured, so your deposits are protected. The main drawback is the lack of physical branches, which may be a consideration if you prefer in-person service or need to handle cash deposits. For tech-savvy users comfortable with managing finances online banks offer a seamless, safe, and lucrative way to park your cash. Money market accounts, or MMAs, are another popular option, offered by both banks and credit unions. These accounts blend features of savings and checking accounts, providing higher interest rates than standard savings accounts, and in some cases, check writing privileges. MMAs are covered by FDIC or NCUA insurance, adding an extra layer of security. However, they often require higher minimum balances to open or maintain the account, and federal regulations limit the number of withdrawals or transfers you can make per month. For those with larger sums to deposit and who want flexibility, money market accounts can be an appealing choice, balancing safety and yield. Certificates of deposit, commonly known as CDs, offer another avenue for medium-term savings. When you open a CD, you agree to lock your money away for a set period. anywhere from 3 months to 5 years, in exchange for a guaranteed fixed interest rate. CDs are insured by the FDIC or NCUA, making them extremely safe. They're especially useful if you don't need immediate access to your funds and want to avoid the temptation to spend. The biggest downside is inflexibility. Withdrawing money before the CD matures usually incurs a penalty, eroding your interest earnings. CDs can be a smart choice for those looking to set aside cash for a future expense, or simply to earn more on their savings without taking on risk. For those interested in combining cash storage with investment opportunities, brokerage accounts, specifically cash management accounts, present a unique option. Firms like Fidelity, Charles Schwab, Vanguard, and Robinhood offer these accounts, which allow you to sweep uninvested cash into FDIC-insured partner banks or money market funds. This setup can provide higher yields than traditional savings accounts and makes it easy to move money into investments when you're ready. However, it's crucial to understand the fine print. Not all brokerage cash accounts are FDIC insured. Many are protected by the Securities Investor Protection Corporation, SIPC, which covers investments, but not necessarily the interest on cash. Always check the details to ensure your money is adequately protected. Turning to government-backed options, Treasury securities offer unparalleled safety. U.S. Treasury bills, bonds, and notes are available directly through Treasury Direct or via brokerage accounts. These securities are backed by the full faith and credit of the U.S. government, making them among the safest investments in the world. Treasury bills, for example, are short-term securities that mature in 1 year or less and often yield higher returns than traditional savings accounts. The main trade-off is liquidity. Once you've purchased a Treasury security, your funds are locked until maturity unless you sell them early through a broker. Treasury securities are ideal for those seeking safety and willing to plan around the maturity dates. Money market mutual funds, or MMFs, are offered by investment firms like Fidelity and Vanguard. These funds invest in short-term, high-quality debt instruments and aim to provide a higher yield than bank accounts with very high liquidity. While MMAFs are not insured by the FDIC or NCUA, they are highly regulated and considered low risk. They are particularly useful for parking cash that you may need to access quickly, such as an emergency fund or a temporary holding place for investment proceeds. The lack of insurance means you need to be comfortable with a small amount of risk. But historically, these funds have maintained their value and paid competitive interest. Deciding where to park your cash ultimately depends on your priorities: safety, yield, liquidity, and access. If your main concern is safety and accessibility, commercial banks and credit unions are hard to beat. Their accounts are insured, widely available, and easy to use. For those seeking higher yields without sacrificing safety, online banks and Treasury bills offer compelling alternatives, often with better rates and similar protections. If you're planning to set aside money for the medium term, perhaps for a future purchase or a planned expense, CDs and money market mutual funds can help you earn more while keeping your funds relatively secure. It's also wise to remember that diversification isn't just for investments. It applies to where you park your cash as well. Spreading your money across different institutions and account types can help you maximize yield and minimize risk, while also ensuring you have access to funds when you need them. Always check the insurance limits and terms for each account, and be mindful of fees and withdrawal restrictions. In summary, the financial landscape offers a rich variety of places to park your cash. From the security of traditional banks and credit unions, the attractive rates of online banks, the flexibility of money market accounts, the certainty of certificates of deposit, the convenience of brokerage accounts, the rock-solid safety of Treasury securities, to the liquidity and yield of money market mutual funds, the choice is yours. By understanding the pros and cons of each option, you can optimize your savings strategy, keep your money safe, and make it work harder for you. Whether your goal is immediate access, maximum interest, or long-term security, there's a solution that fits every need.